Good evening. Good evening. My name is Jeremy Dysock. Just getting the camera, getting the stream up and going. My name is Jeremy Dysock. I'm a FICO certified credit coach with Credit Life Financial Wellness, and I am the founder of the free credit repair advice group on Facebook that you're watching this on. And I would like to welcome everybody to Facebook Live to the weekly credit report. This is something we do every week. I've actually previously been doing it on Mondays for the last 8 months. We're switching it back to Wednesday for me. That's traditionally the night that I do these lives. And these lives are meant to be interactive. They're meant to be educational. They are meant to be a place for you to ask questions. Go ahead and ask them in the comments section of the live stream, and I will answer them for you live here on Facebook. We're going to give the room just a second to fill up. And what I'd like to do in the meantime, perfect, just making sure that we've got everything in place there. Everything's looking good. So in the meantime, what I would like you all to do is think about any credit questions that you've got. Is there anything that you want to know? Is there anything that's been bugging you? Is there anything particular to your circumstances that you don't know what to do about? And go ahead and put those down. Write them in the comments section, and do me a favor, give me some thumbs up, give me some ones in comments to let me know you guys are alive and that this is making sense to you and that you're watching it. Tonight, what I wanted to talk about tonight are some changes that have taken place and some changes that are coming down the road here, some of them very, very soon, in credit repair, in credit, and in financial wellness. There have been some big changes as the economy has been changing. There are some new laws that are coming out. There are a number of different things that are going to directly affect you and directly affect your ability to get a mortgage, directly affect your ability to raise your score, to round out that profile, and all of that. So it's going to be a little bit of a grab bag of important stuff, but it is important stuff. By the way, if any of you would like to have me enroll you, if you'd like to enroll in the Credit Life program, I have to throw my plug in. You can book a consultation directly with me, and I'll go through and talk to you about what's going on with your credit and talk about your goals. And if Credit Life, if the program makes sense, we'll put together that plan and steps and action items to get your score and profile in position for all your goals. Just go to the link here, www.bookcoachjeremy.com. You can pick a day, an evening, or even a weekend for a no-cost initial consult. We'll go through, again, talk about your credit, talk about your goals, put together a plan, steps, action items specific for you so you achieve your goals. And if the Credit Life program's right for you, we'll get you enrolled at that time. Have a consult directly with me by going to www.bookcoachjeremy.com. All right. So I mentioned there are some things that have changed and are changing in the current economic times. First of all, has anyone noticed? This is going to be a test to see if you're alive. Give me some number ones in chat, or give me some likes, some thumbs up. Have any of you noticed things like gas prices going up? Have any of you noticed things like your groceries, the costs of those going up, the costs of goods and services going up? Has anyone noticed an increase in the overall costs? Okay. Now, as the economy tightens up here, and for those of you who are looking to, we got goals. Most of the people who are watching this, are looking to buy a home, sell a home, or get their credit in position for their goals. So when it comes to this, one of the first things you're going to want to know, and this is just a market condition, is that credit has been tightening up. And I'll tell you what I mean by that. When the credit tightens up, when they tighten up the supply of credit they're willing to give out, in the credit industry, so like credit cards and things like that, in the lending industry, they call that tightening up of credit a flight to quality. What that translates to is anyone who was, maybe this risky to them before, they'd extend that much credit to. Now, with the economic conditions, anyone this risky to them, they may only do this much. So one thing you may be noticing, and try to stay on top of these things, try to pay attention to them. You may have seen reductions in your available credit limits on some credit cards, on some lines of credit. And you'll hear people giving you all kinds of reasons for this. Some people will say, oh, well, that's because you didn't spend enough on the card. That's complete nonsense. Complete nonsense. They will extend you as much credit as you are worthy of based on your risk. To, it's got nothing to the fact if you spend $5 a month or $50,000 a month, they're still not going to drop it for that reason. What they're doing is they're doing a flight to quality, meaning they're tightening up their risk. The banks, the credit card companies are projecting losses. They're expecting people to not pay their bills. That's specifically what that flight to quality is. They think a number of people are not going to pay their bills. And so, because of this, they're going to tighten up the available credit supply. They're going to tighten up the available. The available credit that you've got on your cards that you could spend. So, what does this mean? This means that balance to limit ratios will be more important than ever. If you've got a card that you've been using, it's a $5,000 card and maybe you've been using $800 a month on it and paying it off, you are at, on something like that, you are at a 40%. No, I take that back. You're at what is that, 20%? I still got brain fog after COVID. Had that a couple of weeks ago. No fun. All right. Anyway, 8 to 1,000, 8 the 5. Okay, so 8 by 5. That's 4%. Is that okay? Somebody with a calculator. Again, I apologize. Typically, my math is absolutely on point, but I'm a stickler for accurate math. So, $5,000, $800 spent on it. All right. 16%. Okay, so if you've got a $5,000 credit card, and you normally charge $800 on it, and then you pay it off when it's due, $800, and you pay it, or pay it off before it's due, whatever. All of a sudden, if they chop that down to $2,000, your 16% that you've been using becomes 40%. Now, a lot of times when you get these limit reductions, they'll let you know electronically, or they'll send you mail and you'll feel and see if it's thick and it's thin because it's just one page and you throw it out. You miss these things. So what you need to do right now, it's going to be very important as we get into this new and changing economy, that you pay attention to credit limits at the end and you maintain balance to limit ratios. Now, I've preached over and over and over and over about the perfect balance to limit ratios for revolving accounts, for credit cards. There is a perfect balance to limit ratio. There is a balance on the card that you can utilize to credit limit that'll give you the most points in the FICO algorithm. It will give the most point potential and opportunity and raise your score the most. And it's very small. It's 1% to 3%. That's 1% to 3%. So let's take $1,000 credit card. That means $10 to $30 per month. That's it. No more, no less. Any more than the $30, you're more than 3%, you'll miss the point potential. Any less than the $10 on a $1,000 card, you will not get the points either, because that's not considered activity. Now, here's where this becomes important. So you're using $10 to $30 on a card that's $1,000, and they go ahead because of many things. That flight to quality, those reductions that they're doing. And I'm not saying it's going to happen to you, but what I'm saying is we're already seeing it happen. There have been hundreds of posts in the free credit repair advice group. People going, "Oh my God, it got cut from here to here. What's happening? Why is this?" This is the reason. Okay, so if that $1,000 credit card that you're using $30 a month on suddenly gets cut to a $400 credit card and you're not paying attention, you're still using $10 to $30 on it, all of a sudden you're using, well, what's $10 on 400? Well, 10 on 400 is well, that's 2.5% to 30 on 400. I'm not even going to try it right now. But long story short, you're way outside the zones that are going to give you the most points. So right now, market conditions, watch that flight to quality that's happening. I want to show you a little quick something just on that same thing. One of the reasons we're doing this flight, or we're not, I wish I controlled but what happened to credit. But one of the reasons that this is happening, if you look at this graph, we are right now in the second highest level of consumers carrying balances on their credit cards in history. In history, during the Great Depression, during the Carter years, during the Great Recession, during everything, we're at the second highest amount of credit card utilization. And by the way, it happened damn fast. It happened in a month. People maxed their cards nationally in a month to the second highest level in history. So that's got the credit card companies scared. And by the way, if you want to read that article, it's on my personal Facebook page, my credit coach, Jeremy Dysock Facebook page, that article from Zero Hedge that's there for you to read, and you can peruse through it. But these aren't things that I'm just saying, oh, Jeremy's trying to scare people into something about credit, or, gee shucks, I don't know, maybe there's a different reason. I just showed you the numbers, okay? We're at the second highest level of credit card balances in history. So we've got to make sure we're paying attention to our balance to limit ratios. We've got to make sure we're paying attention to our credit limits and all of that. Now, I'm going to give you another piece, another change that's happened. And by the way, you guys, you gals, you, all the other thing, everyone, medical collections. There is some amazing good news on medical collections. Now, who heard this? Amazing good news on medical collections. I don't think people are taking this seriously enough. All right, so this is it's like boom. This is what I'm talking about. There's some ground shaking stuff happening. Okay, with medical collections. Starting July 1st of the year 2020. So we're talking what? We're talking 22 days from now, 23 days from now. Medical collections that you have paid will be automatically deleted from your credit reports. I'm going to repeat that to you. Medical collections that you have paid or settled will automatically be deleted from your credit reports according to the bureaus, according to what's happening on July 1st of 2022. So if you've got medical debt right now, if you've got medical collections, go ahead and settle it. You're never going to hear me say this about collections otherwise. Forget investigating them if you don't want to. Go ahead and settle all of your medical collections. Why? Well, I'm going to put a little asterisk next to that. You know I always do this. But you settle on your medical collections, and as of July 1st, 2020, every paid, settled, paid in full, settled for less than full, every paid medical collection is going to be deleted permanently from everyone's credit report. And this is going to be happening going forward. This is a forever thing. Now, when I said there's a little asterisk, if something's so old it's outside of the statute of limitations that you have to pay on it, then you might want to do it, might not want to do it. That's up to you. That's between you and your credit coach or your financial advisor, or you and your spouse or whomever. Okay. But July 1st, no more medical collections once they've been paid, going forward to infinity. Now, estimated to start sometime at the beginning of 2023. I'm not even kidding. That's literally what the CFPB has said. That's what the bureaus have said. It's what FICO has said, that at some point in the beginning of 2023, medical collections under $500 aren't going to be reported. So if you've got medical collections right now and they're standing in your way of any kind of financing, now's the time to settle them because they're going to be deleted permanently July 1st and going forward into the new year. As they said, at some point in early 2023, they are going to no longer be reporting $500 and less medical collections. They're also planning on having a time limit when something goes to collection until it shows up on your credit. I believe that time limit they're looking at is 3 months. But the definite stuff, July 1st, all paid and all settled medical collections will now be deleted automatically from your credit profile starting sometime in the beginning of 2023. Medical collections under $500 will not even be reported to your credit. And then also estimated to start in 2023, that moratorium where it takes 3 months for them to report those medical collections. All right. So those are two of the big things I wanted to go through tonight. Let me hop back into the free credit repair advice group here on Facebook. And by the way, if you're in the free credit repair advice group, or if you're watching this on Credit TV on YouTube and you're not a member of the free credit repair advice, or if you've got a friend or family that isn't a member of the free credit repair advice group, I want you to go ahead and add them to the group. Anyone you think will find value in this, add them to the group so that they can reap the benefits that you are of being a member. Let's see, there was one question that I wanted to address. This is a little off topic, but this was put forth by Melanie Morris. She said, I've been reading that you can get an FHA loan with a 580 score. Has anyone actually gotten a mortgage, a loan with the score being that low? Would it be better to try to raise it to 620 before applying? I've got 4 negative items on my score. Tempting to pay to delete. That's not the first step. The first step's investigation letters, Melanie. 2 cards with a limit of $500. So you're going to want to add a retail card to that. If those two are revolving, you're going to be wanting to do 1 to 3%. Credit score's like 559. So here's the deal. What I want to address is the 580 FHA loan. Just because you can doesn't mean you should. Just because you can get a loan at 580, it damn well doesn't mean you should. You should wait until your score is higher. Why? An FHA loan at 580 is going to have something called PMI. It's premium mortgage insurance. It's mortgage insurance on it. That's a policy that only protects the lender if you default. And at 580, it's insanely expensive. Hundreds of dollars a month. Okay? Now, it's a little shameless, but I'm going to say you could hire Credit Life for $135 a month, get up to a 640 or a 680, and not only be saving hundreds a month in that mortgage insurance, but also get a better rate too. I've been seeing a lot of people talking about the 580s, and that's just always been something that I want to point out. Just because you can doesn't mean you should. Melanie, I am not trying to just single you out. I'm going to go back and answer your question in the free credit repair advice group, but I did want to tackle that because you're not the only person. I'm just throwing you up as the sacrifice. A lot of people have been asking about that lately. All right, so I'm going to wrap it up for this evening. Not a lot of attendance. I'm going to put this on replay. So if you're watching on replay, thank you. If you're watching live, thank you. This is going to be every Wednesday night. I expected it to take a bit to grow up, being that I've switched to Wednesdays. But again, if you would like me to be your coach, you want a consultation with me, you want that to happen, go to www.bookcoachjeremy.com. I just had a dozen people graduate from the program, so I have room to specifically, individually, and personally coach you in and talk to you, do your consultation, do your credit audit. And during a consultation, there's no cost for the consult. Go to bookcoachjeremy.com. You pick a day, an evening, a weekend that works for you. We'll talk about what's on your credit. We'll talk about your goals. And we'll put together a plan, steps, and action items. And you'll get the experience of a 28-year veteran in credit and lending, who's FICO certified to help you put together that right plan, those right steps to get your score and profile and position during this economy with all the options out there and all the uncertainties. I'll get you in position with Credit Life to qualify you for your goal. www.bookcoachjeremy.com. Book a consultation right now. Get in there. I've got a dozen spots where you'll be able to for sure get me personally. And then I want to invite you all to join me here every Wednesday night at 8 Eastern, 7 Central, 6 Mountain, and 5 p.m. Pacific time for the weekly credit report on Facebook Live in the free credit repair advice group. I appreciate you all. By the way, you can see I'm back. We're all officing from home now. We've gone to full remote for the coaches, for us big dog coaches at Credit Life. So I'm back in the murder bar. I'm back in the horror bar. This is also my office, but I've got 10,000 horror DVDs and Blu-rays and memorabilia and everything down in here. So this is actually, every day I get up and I go to the bar. So growing up in Milwaukee, that's got a wonderful, kind of throwback for me. All right, but I want to invite you all to join me in the Murder Bar every Wednesday night, 8 Eastern, 7 Central, 6 Mountain, and 5 Pacific. I'm going to go ahead, for those of you who did miss this, I'm going to put this on a replay. If you have any questions, you can go ahead and still throw them in there. I'm going to be around all night answering questions in the free credit repair advice group. And I just want to thank you. Thank you so much for the opportunity to be here with you right now. And the opportunity to help you change your life. I always say every time I do my job right, a kid gets a backyard to play in, and I believe it. And that's how I feel about what I do for a living. All right, so you want to consult with me, go to www.bookcoachjeremy.com. You want to hear more from me, join me every Wednesday night at 8 Eastern, 7 Central, 6 Mountain, 5 Pacific. And if you don't want to hear from me, I would avoid it during that time. All right, you all have a great evening. Bye-bye.